So you just expensed a yacht to your business, and life couldn't be better. Then one day, an IRS audit lands on your doorstep. In today's video, we will break down how the IRS cost a business owner $2 million. As a CPA and owner of a tax technology company, I help business owners every year avoid the expensive IRS mistakes that cut their profits in half, and in many cases, destroy their business. It's an easy mistake to make. You hear advice online that tells you to write off every purchase possible as long as it's for business use, and 12 months later, the advice you originally heard is a distant memory and you are left to cover the mistake. Today we're going to cover one of the most interesting cases we've seen of this. It's a business owner who attempted to write off a yacht. Let's dig into it. So to start with this, I just want to kind of set the scene. The case that we're looking at is Damon R. Bensell versus Commissioner. And this Damon is a serial entrepreneur with many different businesses in different industries, mostly in the real estate development space. And in 2005, Damon bought a 67-foot fishing yacht for around $2 million, and he had a company that he owned, purchased, or buy the boat underneath that company. He took the boat to a lot of fishing tournaments, but otherwise it was kind of located at his house. He did not have a fishing-related business. He never chartered his yacht. He didn't even catch fish and sell them commercially. And so for all intents and purposes, it appeared that this boat was just used for personal use or personal gain. Now, with that being said, he still labeled it as a business expense and took deductions for it on his business tax return as a business-related expense. The IRS, of course, dug into this in an IRS audit and disallowed the deduction, saying that there was no substantiation for it to be business-related, and there was also sloppy records to prove any type of business use. They claimed it was not a legitimate business expense. Now, it's important to note that in the time of this case, in the time frame that was audited, entertainment expenses were 50% deductible. Even though now they're no longer deductible after the Tax Cuts and Jobs Act, he had the opportunity to try and prove entertainment purposes. If he couldn't go down the route of it being a commercial boat or a charter business, he had the opportunity to potentially try to claim entertainment purposes, but apparently through the event of the audit, that was unsuccessful. Now, this caused some obvious problems. One, the disallowed deduction led to taxes due. It included penalties and interest and all sorts of other money that was caused by this deduction that he took that the IRS disallowed. So I just kind of want to talk about this case and just talk about my opinion as well. I think based on the information I read about this case, I believe the IRS was correct in this case. And the main reason being is that there's one major mistake that they made. Claiming a substantial business deduction without substantiating the business purposes, while also having sloppy records. That's kind of what we talk about, the bookkeeping being the backbone to a business. Not only does bookkeeping help your business and grow your business and help you see how your business is doing, but it also helps in the event of an audit defend your business expenses, the business expenses that are right for you. And so, it could very well been that in this case, they could have made a claim where it was a valid business deduction, but because the records were sloppy, there was no substantiation, it was disallowed. And so whether that's the case or not in this situation, we don't know, but that's what we see. So, based on what I've read in this case, I think the IRS did make a correct decision. Again, main mistake that they made was they claimed a substantial business deduction without telling the business reason, without having a potential business purpose, while also not having great records at all. And one thing that I think we will always encourage business owners to think about is just because everyone else does it, or this person down the road does it, or this person that you've known for a while, it's a successful business owner, does this thing, does not make it right. Doesn't mean that just because they have never gotten busted in 20 years, doesn't mean you won't. Also, there's differences where it might work for one business, be a valid business deduction for one business, but not for the other. And so I want to always caution everybody just saying, oh, I'm going to take this deduction because somebody I know does it and they never get caught, or somebody I know does it and it works for their business, does not necessarily make it right. So let's look at the specific case and say, okay, what could have done better? What could we do to make this case substantial and make it a valid business deduction? First off, we have to find a business purpose. We have to find a business purpose that is ordinary and necessary. And so the IRS always says, in order for an expense to be a valid business deduction, it's got to be ordinary, typical, usual in your type of business, and necessary. Something that can help you gain clients, get clients, retain clients, get employees, retain employees. It has to be both ordinary and necessary in your business in order for it to be a valid business deduction. And while if it meets that point, that's just the first step. Now we have to provide proof. and keep detailed records that proves why it is ordinary and necessary and why it should be a valid business deduction for us. So, that proof includes things like logs, receipts. We always say right on the receipts, who, what, where, when, why. You write on the receipts, what is that business purpose? Keep logs to prove that business purpose. And so when we look at this case specifically with the yacht, could this gentleman have started a chartered fishing business? I would think a fishing boat would definitely be required or ordinary and necessary in a chartered fishing business. So that would definitely make this a valid deduction. At that time, could he have used the entertainment clause within the tax code and brought clients and different things on the boat? Brought clients on the boat to say, okay, we're entertaining clients, or we're encouraging people to check out our other real estate properties, but we're also going to encourage them to check out this fishing opportunity as well. So could there have been different use cases there? Now, of course, entertainment's no longer deductible, so that wouldn't work today, but back when this case was, that could have been a play that this gentleman could have used. Could they use it as a mode of transportation for workers, for clients? If we're going from, one of our properties to another property, could that have been a potential use of the boat? All sorts of different possible options. But the problem in this case is that the person didn't think about those options first. The person said, I want a fishing boat yacht, and I'm going to go buy it and I'm going to put it under the business. They didn't think about, okay, how do I find a business purpose for this? If I'm going to put it under the business, how do I make it a valid business deduction? They didn't think about that part until it was too late. They got on it, and now they're trying to scramble and try to figure out, okay, how do I make this a business purpose now? And so that's what we always talk about within TaxElm and in our podcasts and YouTube videos. We always talk about the importance of doing correct implementation, because there's a lot of valid tax strategies out there that are directly in the IRS code. But if we don't implement them correctly, we don't create that documentation, we could make that strategy disallowed, where it's not allowed. And that could be in this case with the yacht, where the yacht is not allowed. And so we want to talk about those different things and think about, okay, if we are looking at a fishing yacht that we want to purchase for our business as a business deduction, how do we make it a business deduction? Again, could he have started a chartered fishing business and utilized that to do that? There are many different options, but we want to think about and we want to protect ourselves on the forefront. We don't want to just wait till an IRS audit hits and then try to scramble and try to figure out, okay, how do we make this thing valid? And so we always talk about correct implementation. First, we want to learn a strategy, and that's important. Then we want to implement that strategy, because if we just learn the strategies, that saves us nothing. That just creates knowledge. That gives us knowledge in our brain, but it doesn't save us anything on taxes. It's that implementation piece is where we start to actually save taxes. But I also say correct implementation, because there you can take a strategy. Let's look at the home office as an example. The home office deduction, black and white in the IRS code, but people can do it incorrectly. They can learn about it and they can implement it, and they can still be disallowed that deduction because they didn't do it correctly. They're going against the law. They're taking advantage. They're being greedy. They're taking a home office that's 90% of their house, which never would make sense. But they're doing that to just try to skirt the law, to try to get greedy with the tax code. And so that's implementation. It's just incorrect implementation. And so that's why it's important that when we learn a strategy, not only do we implement it, but we implement it correctly. We dot our I's, cross our T's, we put that documentation on file. What I always say with all of our strategies is whether the IRS comes knocking or not, you have that documentation on file. So if the IRS does come knocking, it's very easy. Here's my information. Here's the substantiation. Here's everything to support this. And then they can go on their way. Let's look back at this yacht case. If they would have found that business purpose and had all that substantiation on why it's a valid business deduction, and put all of that on file and had it ready, and then the IRS comes knocking and saying, hey, we don't think this boat's a valid business deduction, we could say, well, here's our log. Here's what we used it for. Here's the business purpose. Here's who we used it. Here's every use of this yacht and why it's business tied to the business. The IRS would have said, okay, makes sense. We're going to walk away. But the taxpayer in this case didn't do that. And maybe it's because they couldn't, because it was not a valid business deduction. But let's say it was a valid business deduction, but they just didn't have anything to back up and support it. Now the IRS disallows it. So that's why having implementation, the correct implementation up front, have those logs, have those receipts, have those documents on file, so that if the IRS ever does come knocking, there's nothing to worry about. You have everything there to support it. The other thing I want to talk about is the importance of solid bookkeeping. In this case, they had a mess for records. And that's one of the reasons the IRS disallowed it, is they tried to look into the different opportunities of where they could find the validity of this, or where they could find even the activity of this deduction, and it was hidden. It was a mess. They had to peel back records. They had to look at bank statements where if this client had solid foundation in their business, a solid bookkeeping system, it would have been very easy to pull the records and everything else to help back up and support this deduction for them. So now within TaxZone, our software, we talk about all kinds of strategies that can be implemented to help reduce taxes the correct way and legally. So within TaxZone, we teach you how to avoid an IRS audit and how to dot your I's and cross your T's. We have videos, contents, guides, workbooks, downloads, templates. We have access to tax experts that help you ensure that you have everything in place to ensure that you are implementing this strategy correctly, and we have all the tools available to help you implement this correctly. Now, this could be for different strategies, like whether we're looking at maximizing deductions, or maybe the home office, or maybe automobile. Sometimes we look at travel. How do we make travel a valid business deduction? Or meals. How do we take advantage of the meal expense? We might look at employee entertainment. How do we make that a valid business deduction? Or the 14-day home rental rule, the Augusta rule. Sometimes we talk about setting up an S corporation for your business, or hiring your children, or setting up board meetings, or utilizing charitable deductions, or even going into different types of investments and advanced type planning to lower your tax bill. Whatever it is, within TaxZone, we have all the documentation, the templates, the downloads, the videos, the training to help ensure that you can not only learn the strategy, but you can also implement it and implement it correctly to avoid an IRS audit, to dot your I's, cross your T's, and make sure that this is a strategy that you believe in, that you have the documentation to support, and you can lead up to. Now, I just want to give a quick story about someone that we had that went through an audit, and they were very nervous. They got an audit letter from the IRS because they had high expenses in a certain type of category. But this person was working with us, and they had all the documentation on file. They had all implementation steps. They dotted their I's, crossed their T's on everything. So when the IRS came knocking, they were very nervous. And so we said, don't worry, let's go through this audit. And within one meeting with the auditor and having all of this documentation laid out, clean, organized, everything in place, the IRS auditor saw it. After one meeting, said, case closed, everything's good to go, move along forward. That's the power of what correct implementation can do for you. So now you have heard about one of the many tax mistakes that cost business owners every single year. You know what to look out for your own business. But as I mentioned before, understanding and implementing a strategy is very different to ensuring it's compliant. If you're looking for a tax savings blueprint, unlimited access to tax experts, or even an annual one-on-one live consultation, click the link below to get started.